Well, good morning, folks. Hey, it is June 1st, 2022. It's Shooter. Hey, we are going to go over BLDR here, looking at market weakness. I think it's going to start hitting us maybe September, a little bit further out, but the count looks really good to the downside for me here. Maybe about a 30% drawdown from here. So now be sure at the end of this video to watch or review our disclosures. Let me jump right into the chart. Nice technical grind on Builder's first source here. 1, 2, 3. Nice thing about this is, we're probably going to get an extension of this ABC instead of it being equality. Something, like this maybe, but instead of elongated here. So first I'm looking at this breakdown, 58.80, that sort of confirms the breakdown. Let me just walk through why. We have our speed line here. So of course it gets above 71.68, I'd be out. So you may be risking $6 to the upside. Any market strength, I'd be shorting it off of that speed line, of course, unless it gets above that, which I don't believe it will. Now, our ultimate target is going to be down around 38.60, January next year, or it could be quicker than that. Realize the angle there is supportive of next year. So this is going to be a longer term short, sort of thinking that way when we're setting it up. So we want to take pieces, 60, 90 days out and roll into a longer position. So first thing is we tested the 78.6. We have not closed below the 78.6. That's one of my rules for continuation. However, the count just looks so clean, as far as our structure. We had a confirmed high, divergent high, and then we came off. So, and on top of that, we're going to have this, interest rate pressure on builders and builder supply. So I think in the markets where they have a captive audience, we're already starting to see a slowdown in a Home Depot. So that was just sort of my thought. So I'm thinking maybe sell, for the time being, a July or August 70, maybe 72, on any wick, any back test towards the speed line, put a little piece on and then plan on adding as it starts to work. And then look at targeting the 123.6, which would be about a 49 strike. And I'm going to say just shoot for January 1. So roll any gains you get off of the selling any premium to the high side, selling the calls, roll it down into the 123.6. 49. The reason I'm saying that instead of the 43 is because right at the moment we haven't broke below the 78.6, so we want to stay shallow. Or if you want to be a little more generous and give yourself a little more room, you can go and do the 8-day at 57 or the 100 fib at 55. But I think this is going to be another play, sort of like how we caught oil and how we're in XLE. We're just going to find a direction in these certain stocks and just play them out for 2 or 3 months and earn some income off of them. So that's the game plan. That's what I got. Great trading. Until next time, folks.